Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Tesla shares, they are higher this morning. They're up about 0.3%. But there was some news. Elon Musk said the company plans to poll Tesla shareholders on whether to invest in his other company, that's XAI. So here to break it all down for us is Craig Trudell. He's Bloomberg Global Auto Editor. Craig, I have to ask you, this is something that came out. I mean, what kind of message is this sending?
It's sending that Elon's business empire is becoming all the more intertwined. So this has been sort of a case on and off for years. We can think back to the Tesla Solar City acquisition. And that's going back quite a ways. But in this case, it would be Tesla. His most valuable company in investing in sort of his up-and-comer, and one where he's, spent an awful lot of time and energy focused on lately as Tesla's electric vehicle sales have been slowing. He's been really sort of dead set on taking on OpenAI and sort of standing up as a competitor to ChatGPT. And as with all the companies in this space, spending an awful lot of money to try and compete in that realm.
So where do we stand here in terms of kind of how investors are viewing their investment in Tesla? Are they invested in an auto company? Are they invested in an AI company? Are they invested just in Elon Inc.? How do they think about it these days?
Yeah, I mean, I think Musk has been trying for several years now to sell and position Tesla as much more than just a car company, right? And it's definitely in the energy space and has a battery business to show for that. And in AI, he's talked a big game about developing self-driving technology. He's not gotten there yet. As we've seen with the company, starting to offer rides in Teslas around Austin, Texas, they still have, Tesla employees in the front passenger seat to sort of take over in events where, the cars have not been able to handle, navigating the streets on their own. And yet with SpaceX, I think interestingly, for them to have just pumped $2 billion into XAI, I think there's a little bit of FOMO on the part of some in the Tesla shareholder base, where they've seen, XAI go from, not all that valuable a startup to suddenly, an extremely valuable startup, and they feel like they've missed out on some of this appreciation and want in on that.
So with all that said, Craig, I mean, does Musk support a merger between XAI and Tesla, or maybe XAI and SpaceX? You mentioned SpaceX too.
He says he does not, and I think there's been talk about this for years, right? That and on and off again, there's been questions as to whether or not Musk is sort of stretched too thin and doing too much. Would it make more sense to turn his companies into one and sort of think about it as sort of the General Electric of the new age, right? Which is kind of fascinating because, of course, that didn't work out too well for GE, and yet even some of Musk's own allies have sort of alluded to it's viewing him and his empire as sort of a modern day General Electric. So he did take pains to say on X that he does not support a full-blown merger of Tesla and XAI, but he has signaled on there multiple times now that he would be in favor of Tesla putting money in, and that's of course a proposition that could be helpful if XAI continues to grow its valuation. We should note, however, that our colleagues have reported just in the last month or so that XAI has been burning through about $1 billion a month. So this is a company that is really sort of cash hungry and needy as it's trying to stand up a business, with all of this capability.
Yeah, and Craig, it's been, a month or two since Elon Musk left the U.S. government, Doge. Is there any evidence that he is meaningfully engaging with Tesla?
I think he's messaging more about, sort of what Tesla's up to than he was while he was in Washington. He did also post just within the last day that, he was in Tesla's design studio and sort of hyped up how excited he was about what he saw. But the company is sort of in this really sort of challenging state from a sales perspective. And you've sort of gotten indications that, well, maybe he doesn't necessarily fully have his finger on the pulse, in the sense that he told us just within the last few months that sales have turned around. A couple months later, the company reports that its vehicle deliveries had fallen 13% in the second quarter. So either he was, not necessarily up to speed on the state of sales, or perhaps he was more optimistic that they were going to be able to turn things around than they ultimately were able to last quarter.
Okay, Craig. Thanks so much for your reporting. Appreciate it. Craig Trudell is a global autos editor for Bloomberg News. He's based in London, joining us via Zoom here.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
This is Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. Paul, so summer barbecue, you think hot dogs, right?
Love it.
Okay, what's your favorite? What's your go-to hot dog?
Oscar Mayer.
There
no
you
question.
go. Yes.
Yeah, absolutely.
Okay. See, I'm a Brooklyn girl. I go Nathan's. But
okay, that's good. That's good.
All said, there is some big news when it comes to your barbecue. So a company may be splitting up. Sources saying Kraft Heinz could break itself up, spin off into this large part of the business, into this new entity. What is this all about? Let's bring in someone who knows about it. Jennifer Bartashus. She's Bloomberg Intelligence Senior Analyst, Retail, Staples, and Packaged Food. Jennifer, I know sources are saying a lot of things. What's the latest that you're hearing about this breakup?
Yeah, good morning. So this is an interesting breakup because it's 10 years after they merged together, and it seems that the main portions of that initial merger will go their separate ways. The way we look at it, it looks like there's a core group of what they consider their taste elevation platform, which is the sauces and the seasonings. Taste elevation.
Oh, please. That's got McKinsey written all over it. Is that just spices and condiments?
That's spices and condiments.
There you go.
Yeah, exactly. And then they have, that's kind of been their growth area for the last couple of years. So we think that that's really going to be what will be the residual part of Heinz. And then it's undetermined yet exactly what will go into the rest of the business, but it'll be largely those grocery categories where they've invested a lot to try to revitalize brands, and it just hasn't worked in terms of really rejuvenating sales.
When I think about brands in the shop, going to the supermarket, boy, those house brands, private label. Talk to us about the growth of private label in general. Boy, and if you're a brand like an Oscar Mayer or something that you spent gajillions of dollars over 100 years, it seems to kind of go by the wayside almost.
It's true. You've got a good point, Paul. Private label has been consistently growing and got a huge bump since the pandemic.
Yep.
And part of that is that the retailers have really invested in the quality and the differentiation of those private label brands, so where consumers now really consider them not just a replacement for national brands, but in some instances just regular brands of their own right. And so, Kraft Heinz actually had reduced some of its exposure to private label when they sold off the Planters business, when they sold off the cheese, like the shredded cheese business with Kraft. But the core grocery business, they do still have a lot of exposure to private label.
So is this a lot of competition from, let's say, startup food companies appealing to younger consumers? I mean, what kind of sparked this?
Well, there's really been a shift in the way consumers are looking at brands. And unless you own a long legacy brand that you can reinvent and really, drive interest from younger generations, it's really hard to keep that going. And so what we've seen is that they've done a good job with revitalizing things like Philly cream cheese. But despite a lot of investment, brands like Capri Sun, Oscar Mayer, Maxwell House, these brands just aren't resonating with younger consumers. And that means that the growth prospects for those brands are a lot lower. And that makes it hard to really bill yourself as a growth type oriented company.
So I know, as I think back to my M&A memory banks 10 years ago, Kraft and Heinz, Berkshire Hathaway had a big hand in putting these two companies together. And look now, they're still the largest shareholder with just under 28% of the stock. I assume Berkshire Hathaway, Warren Buffett, has kind of signed off on this deal, or is open to it at least?
I would assume that they're open to it. Over time, Berkshire Hathaway has actually done quite well out of this deal, even though Kraft Heinz as an overall entity is probably disappointed in the overall analysis. But the merger was in 2015. It's been 10 years. The value of the deal at the time in 2015 was $45 billion. Today's market cap, it's $32 billion. So and yes, they've sold off a couple of brands, but it just hasn't materialized to be the type of growth that I think Berkshire Hathaway initially envisioned it would happen.
Jennifer, can you dig more into some of the advantages, but also the risks associated with breaking up the company?
Obviously some of the advantages, this seems very similar to what Kellogg did when they spun Kellanova and WK Kellogg out into two separate companies. They separated the growth prospects and then those from the slow growth areas. That's very similar to what Kraft Heinz seems to be doing. Obviously, if you can focus on growth areas, that gives you undivided attention to really expand and grow. That would be an advantage. I think one of the disadvantages, and this is something that's kind of a broader question to consider, is whether there's a cycle that's starting. Because we've seen companies like Kellanova split. We see Unilever spinning off their ice cream business. And those new entities are now being bought up by others. So you've got Mars acquiring Kellanova. You have Ferrero acquiring WK Kellogg. But those, in order to get regulatory approval, you have to have categories that aren't overlapping. And so you're seeing a new birth of new kind of conglomerates of dissimilar portfolios. And so it makes me wonder if we're setting up another cycle where in another 5 years, 10 years, we're going to see these companies that have been buying up the underperforming brands going through a similar type of activity.
What's driving all this? It doesn't feel like this M&A activity, whether you're buying or divesting, is out of position of strength. It always feels like, I don't know. I'm doing it because I don't have any growth, and I got to do something. I got pressure from shareholders to do something, so I'm either buying or selling. Because your business doesn't have a lot of growth.
No, it's true, Paul. And I think one of the crises that we've sort of seen in packaged food, at least as the North American companies, is a lack of real true innovation. So what's happened is a lot of companies have fallen into this pattern of innovation being a new flavor or a new extension, a new size of the product. And that's not really what gets consumers excited. You need to bring new and different products to market. And that's an expensive endeavor. And companies have sort of shied away from that. And although they're trying to reinvigorate that innovation pipeline, we just haven't seen a lot of home runs coming out since the pandemic. And so, I think when you've got that backdrop, you have to evaluate your portfolio and say, how do we focus on the strengths that we have? And can someone else do better with the categories where we're not doing as well?
All right, Jen, thanks so much for joining us. Jen Bartashus, Senior Retail Analyst, Bloomberg Intelligence. All right, Lisa, the key question, your Nathan's Hot Dogs, are you ketchup or mustard?
Oh, mustard with sauerkraut and red onions.
Okay, solid.
There.
I'm a mustard person too, but if somebody put a hot dog with ketchup in front of me, I wouldn't not eat it.
Well, here's the thing. I just came back from Chicago, and they said if you put ketchup on your hot dog, no, that's
really?
A big no-no. They do not do that in Chicago.
In Chicago, okay, good to know. Good to know. Yeah, I'm definitely a mustard person, but again, you throw a hot dog in front of me with ketchup, I'll probably eat it as well.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Welcome back to Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. Weight loss drugs, right? All the rage. I always want to know what is the latest with it. So here with that and much more is Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals. Sam, thank you for joining us this morning. Just want to ask, what is the latest? Because we hear so much about weight loss drugs and different companies. What's the latest you've been hearing so far?
Yeah, hi Lisa. So in terms of what's happening in the market, we're still waiting to see whether the prescription counts for Novo Nordisk's US Wegovy numbers are up or not. They've been flat for pretty much most of this year in terms of the number of scripts that doctors are writing for their Wegovy. And the opposite is the case for Lilly's Zepbound. It continues to keep going up. And it's a pretty interesting battle, which seems to be currently being won by Lilly, and time will tell. What is interesting is that my colleague Ord Gerspacher just finished a deep patent analysis for that's right, exactly, Paul, for Wegovy. And I mean, the dates in terms of patent expiry, of course, they're important because that's when generics can come in and compete with you. Here we go from possibly, she says, 2031, 2032, in the US at least, to 2040. I mean, look, that's an amazing outcome. And she puts a decent probability on it in terms of the ways that they could protect it. So that could mean a lot for a product that could be selling $5 or $10 billion a year, right?
All right, we got to go to the elephant in the room here. I mean, Jesus, for our listeners on radio, Sam is in some kind of contraption. Like I'm guessing he fell off a bar stool and hurt his arm or shoulder here. What happened, Sam?
Yeah, it's that cheap drink you guys sell in the US. You know, it just doesn't work for me. What I need is classified growth red wines and white wines, right, Paul?
So what? I mean, I'm assuming there's something going on there. So, all right. So
it's a rotator cuff surgery. That's it. It's quite straightforward.
He's not an athlete.
He was popping a bottle of Bordeaux.
Yes, he's popping a bottle of Bordeaux. Threw out his shoulder, opening a bottle of Bordeaux. So, talk to us about what's the latest on the cancer field, Sam? I know you go to a lot of conferences and you're on top of the latest research. What should we as consumers and maybe even investors in healthcare stocks and biotechs, what should we be thinking about as the next frontier on the cancer front?
Yeah, I mean, we have a bunch of conferences coming up very soon. So the myeloma conference, the International Myeloma Society in September, the World Lung Cancer Congress, then there's the big European Society for Medical Oncology conference in October. During these, we're going to hear about whether there's going to be big step changes again in the treatment of some diseases, particularly lung cancer. So we got Summit Therapeutics with possibly some data coming up, maybe at the World Lung Cancer, we'll see, or at ESMO. And we've just done a survey of US physicians, which came back with very interesting comments, which you're going to write about tomorrow, about some other trials that are ongoing. So obviously I can't front run that. The data will be published tomorrow on the terminal. But there is stuff still happening in cancer where we're seeing potential for paradigm shift. And that's some of the things that we'll be referring to tomorrow. Of course, in the middle of all this, we have pharma companies continue looking for products to expand their pipelines through M&A.
Now, Sam, we've been talking a lot about tariffs lately. How is the biotech sector, even pharmaceuticals, if you can dig more into how they're being affected by tariffs?
Yeah, so that's one area. If you look at the performance of the pharma stocks relative to the rest of the market, I mean, Mag 7, I mean, I don't know where they're going, but Paul, I'm sure, knows more because of the background he has in analyzing tech. But they just keep going up. I mean, there's nowhere else for them to go. If you put them aside, okay, the S&P 500 maybe hasn't been as magical as when it includes the Mag 7, but pharma has been a little even less, a bit more lackluster, partly because of this continuing conversation about tariffs. That 200% is something that President Trump mentioned just very recently, although it's delayed till next year. You've got your most favored nation pricing that's coming up. You've got your possibility that the regulators are going to be, we don't know where the regulator is going at the minute, to be honest with you. Positive, negative, favorable, not favorable for the evolution of regulatory framework in the US. So there's a lot of questions, and I know this is Paul's favorite word, uncertainty, that still dogs the pharma sector.
Yep, that's certainly the case. And maybe, August 1 might be a date. We get some more clarity there. Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceutical Analyst for Bloomberg Intelligence. He's convalescing there in London in our London studios. But he makes it into the studio, folks, even with one arm in a sling. So we appreciate that. He's playing hurt out there for us. That's what happens when you get old, Lisa. Things happen. They just kind of go out.
Are we going to see you in a sling? Jeez, I hope not.
I hope not. Exactly. So Sam Fazeli there. So and M&A, you mentioned M&A. I'm just so far in the first quarter, this is according to Sam's notes, so far in the first half, $32 billion of M&A in pharma, 13 deals. Last year, it was $16 billion for 16 deals. So dollar amounts certainly bigger this year.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.